Okay, Ross, let's get into long-term thinking and,
Yeah.
and how you approach this in the markets.
It's like an arbitrage between short-term mentality of the markets and the long-term thinking of investors. So the way the markets work today, which is one reason a lot of older guys struggle in the markets, is they don't adapt to the way the markets work today versus the way the markets used to work. For example, if you're not on Twitter, you are not getting information as fast as I am.
It's true.
So, and I had this debate with a reporter who sometimes reporters think they know more than we do, which is a big mistake. We have like $1 billion we're betting on stuff. Trust me.
Right.
We really know what we're doing.
Yeah.
And I was having this debate, and the guy's like, how do you know this? And I go, because I have a guy on Twitter who sits at the Tesla factory taking pictures every day,
Yep.
Oh, so, you can get information on the short term that can be very valuable very quickly. You have to know how to parse what's true and what's not true by your sources. But the markets have changed. And so you can really take advantage of the short-term swings in the market that are created by the volatility, A, of computer trading, and B, of short-termers, by thinking long-term.
Yep.
So one of the strategies we've been using is we wait for our favorite companies to get really whacked after earnings. Like now after earnings, you have no idea which way your stock's going to go. You have great earnings, stocks gets hammered. You have bad earnings, stock rallies.
Coin flip.
It literally makes no sense anymore. Like I don't trade around that at all.
Can't.
Like, they're going to have a great earnings report. That has nothing to do with where the stock's going to go.
Yep.
Like it's literally a coin flip. And so what we do is we wait for the good companies we have to miss by a penny. They get hammered by like 25%. And then we'll add to the position because we're like, here's an opportunity because it's such short-term thinking.
Right.
Versus on the long term, this is a really good company.
Yeah.
And so we constantly look for those stocks that get super hammered. Like IAC right now, got really cheap in the correction. Like, people aren't going to date anymore on Match and on Tinder.
And they still own 50% of the company or something?
They own a lot of
amount,
Match,
right?
and they're about to spin it off.
Yeah.
But I'm like, trust me, people don't give up lovemaking.
Right.
It's like, I don't care about the virus, It's like, I'll wear a mask, So I'm not that worried about it, but they hammer the stock off this like weird fear, or what we're seeing now with casino stocks. And so if you're a long-term investor, and let's say one of our themes right now is sports and gambling have mixed, and they've also mixed with Vegas.
That's a huge, and I mean, that's just getting started.
Totally.
Right.
So when we talk about long-term thinking, I'd say every decade has its themes, and every decade these themes play out. And if you're invested in these themes over that period of time, you can make 10x returns, So I could buy like Apple and make 15 to 20% a year, let's say, if they do everything right.
Mm-hmm.
And I'm perfectly fine with that.
Right.
But you make a good return, but you don't get like really rich. Where you get really wealthy is when you're on the wave, when you can get on the wave of something that's really happening,